After poses a very good question. Why is 1 billion market cap for Fartcoin okay, but 10 billion market cap for IonQ not okay? I will tell you something after. I think they're both shorts. I don't know if you... Pretty wild, but yeah. How does this guy not realize that like some people thought I was a pretty promotional CEO. I always thought I played it pretty accurately. Like, how does this guy not realize that telling yourself that you're going to be the next Cisco is not like the biggest red flag in the world? Talking about the golden dome. Yeah, most big pharma is not a short. I'm long Sarepta. There's long PayPal. Most big tech is not a short, like Nvidia, Google. Those are good longs, maybe. You know, I do market neutral. I try not to have more longs than shorts or more shorts than longs. So like, we bought Circle at the IPO, made like 30–40% on that. Don't make me raise my voice at you. I don't like raising my voice. All right, the old Martin's staying in prison. This is a new Martin. What AI company makes money other than Nvidia? Okay, well, let's see. Microsoft, Google, Oracle, OpenAI, Amazon, CoreWeave, Meta, Tesla. Is that a good start? Yeah, I don't know who you think you're arguing with after, but I'm going to need some complete sentences if you're going to try to come to the crown. Slazzer, OpenAI loses because they're building out infrastructure. The core business is very profitable. I mean, they have 10 billion in revenue. They just started the company. They have 100 billion in revenue. I've never seen a startup that just started, didn't optimize GTM and has 10 billion in revenue. It doesn't grow to 50 or 100. They're just scratching the surface. I think OpenAI could be 500 billion in revenue or more. I don't think all of them lose money on inference. But you also have to realize that like the compute costs drop really, really fast. OpenAI has been lowering prices. Maybe you guys know more about OpenAI than I do. I don't know. Hey, it's possible. Cursor I can't speak on, but it is possible that you know more about OpenAI than I do. It is definitely possible. You know, I just may not really be an expert at what I talk about. It's just possible that you are the expert, in fact. Sometimes that's how it is, you know? I study stuff for years, just show up and I get schooled by some rando. It is what it is. It's hard to say how vulnerable Bitcoin is to quantum. I'm worried about Oklo because it's very bubble. It's like bubble behavior, and it's going to be a new Fartcoin. It's going to be a new barometer for like how speculative people want to be. So it's like if Oklo's up and Fartcoin are up, maybe. Okay, so let's say you're right. You know, you guys buy all the stock and it goes up. Now that's what I'm talking about. Is MOES. All right, so stock goes from 20 to 40. Sweet. You guys are doing great, right? Yeah, we doubled up. And we're going to double again until I'm the richest guy in Bama. Understood. All right, so now the bid is 40 and the ask is 48.05. You keep going to this bid ask thing. I don't like that. Right, but the last sale was how you know, they determine if you have a margin call or what your account is worth, right? So all that really matters is what the last price was, whether it traded at the bid or their ask, doesn't really matter. But that's the new price. That's your new worth. If you own 1 million shares, you're worth 40 million if it trades here. You're worth 40 million, 50,000 if it trades there. You can't really change that. That's just how the market works. It's called mark to market. I know I wish I could mark my stocks to whatever price I wanted. It seems like that's what you guys are trying to do. We're just going to trade it amongst ourselves. Mark this mark this company to 600 a share. Why not? They do it on Wall Street all day. I want to do it too. I understand. Okay, so let's say this happens. You guys diamond handed it. But what happens to the person that bought it for like 20 and now it's at 40? They gonna diamond hand it. I understand that, but let's say that person owns 1 million shares and they want to pay taxes or, you know, buy a car or something. They only want to sell 100 shares. I don't see a problem with that. That's only 100 shares. Okay, right, but they're going to make the price go down because they are now hurting the stock price. The million shares they own kind of are more of a liability than an asset because the only thing they could really do is make the price go down when they sell. And in fact, they're going to have a disproportionate impact on the price because you guys own the float. And when they sell, their shares are some of the only shares left trading. So you kind of have hurt yourself, I think, by cornering this stock. In fact, if you look at how the corners have worked, they generally don't. Nobody's ever cornered a stock. It's never actually worked in the history of finance. Markets have been around for 300 years. I think the thinking that some people have is like, it's magical thinking, and I don't know why. I mean, some people buy, like, the cost of admission is worth, it's honestly worth to many people the entertainment they get out of it. Because they think they're sticking a middle finger up to Wall Street or something, but the funny thing is Wall Street sticks one right back out. I heard a rumor of how much Citadel lost on GameStop. Some people think Citadel made money on GameStop. Does anybody think that? I'm not supposed to talk about this either. Very much not supposed to discuss this matter. Maybe it is public. How much did Citadel lose on GameStop? It's a big number. Big number. I mean, Citadel's still in business, still doing fine, right? So you can guess, but you know, they didn't make money on GameStop. They didn't make money shorting GameStop or doing payment order flow. But I think that markets are a little bit weird. Like, so take quantum computing, for example. This is going to sound a little like voodoo and like technical analysis, so you got to bear with me and just take this with a grain of salt. Yeah, they did not make money on GameStop. Citadel lost a gigantic amount of money. One of the things about markets is that they're really effective tools. They kind of work, I'm not going to say they work on a supernatural level, but I will say that the outputs of markets as machines, they're not neural networks, but they're machines. The outputs of lots of machines are surprising. Neural networks can output natural language. It's incredible. Markets output something it's a process. Or a machine that outputs something really interesting. One of the things that markets seem to sense is weak positions. So at the time of the squeeze, so to speak, GameStop, you know, there were a lot of hedge funds in trouble shorting the stock, and they basically had to capitulate, or they would suffer sort of either permanent loss or a really large drawdown. And neither are particularly good for the hedge fund, for having a hedge fund business. Your clients don't want to see you have erratic ups and downs. You guys know, many people poke fun at me. I'm having very much right now an erratic loss, but I'm not a hedge fund. I don't have clients. I don't particularly care about my month-to-month performance. I care about how I do at the end. I do care about permanent loss, because if I have permanent loss, I don't have any capital to make it back. So I have to adjust my position sizes to kind of roughly allow me to stay in the game without, you know, being crippled. And even being right on the trade, you still don't make any money on it. So I think that one of the things that markets can sense is the pain of each side of the trade, which, you know, some people call max pain or max pain theory. Some people even have formulas for calculating what is max pain, but it's not really determinable. You can feel it out if you're a really good trader. Also, if you have your ear to the ground and you're talking to lots of funds, you can feel it out too. You can look at the short interest a little bit and see if there's been capitulation. And sometimes there's pain, but not capitulation. Sometimes there's pain and it seems like it's going to have a capitulation. So it's really hard to tell. When you whisper, well, you know, the hedge fund industry is composed of people. We talk, we gossip, and there's a lot of discussion about who's losing money on a trade or who has a big bold trade they're making. Oh, I heard, you know, I don't know, Millennium is short 5 million shares of IonQ. Oh, I heard they're going to fire the guy that did that. And, you know, they're going to have to buy 5 million shares of IonQ. You know, there's that kind of idea. So I think that markets can sort of sense these sometimes, but in other ways, markets don't particularly care. In the long run, the process of the market, you know, kind to take a 𝗦𝗫𝗀𝗃𝗀𝗃 quote, the market weighing machine is a process that runs concurrently with the market max pain machine. So to me, I feel like, again, the rhythm of these trades is really interesting. Some people are really in tune to them. They really have this gut feel. To me, I like to override my gut feel a lot and just go with the weighing process machine, especially because I don't manage other people's money. I feel like, you know, what do I care? I can be down 10% in a month or more. as long as I feel comfortable what I'm doing isn't crazy. It's an interesting kind of way to do things. No, Christopher, I'm talking about increasing positions and being unafraid of mark-to-market losses. You know, other traders have to flinch and capitulate, but I can afford to flinch last, but even I have to flinch at some point. I haven't really begun to raise more capital for the trade, but I'm confident I could raise quite a lot for adding to this trade, but I could also use other resources I have, which I haven't done quite yet. So I have some breathability if it goes to, if these stocks double again, you know, I could survive it. I am heavily short QUBT, yes. You are never supposed to add to a losing position, but the word never doesn't really apply to investing or trading. There are no rules, there's only heuristics. And I think that this is one of those times where it's like Tilray at 200. I don't know, like I don't think I'd do anything for less than like 5 million a pop. And I would just get a fee for the trade, manage the trade somehow. That's basically it. It'd be like a special purpose hedge fund. It's probably much more of a split that's favorable for the investor. Like Bill Ackman has done this before where he just raised a fund just to buy one stock. Yeah, Garrett, I mean, it's certainly, you know, I don't think other hedge funds would be great clients for the trade. There's family offices and folks like that trust, you know, they like the idea, they read the pitch, so that sounds really good. How do I get involved? You know, and I think depending on who you are, you can pull it off. That's right, they don't have to pick sizing, entry, exit, all that stuff. Yeah, Aditya is also right that, you know, these kinds of stocks scare a lot of hedge funds. If the last few months has basically scared all of them, so. If I knew that, of course, VP, I'd go long. You know, that's just kind of what you have to live with as a short. I mean, I think you should never leave your North Star for longs or shorts. You know, the day that you start thinking that you're the psychological master of the market, you basically said, my ability to value companies and research them is subordinate to this mysterious psychological phenomenon I think I can intuit. How can you intuit it? You know, how do you know that you're not just throwing a dice? At least with your research methods, you know, you have something of a understanding. Your intuition could be good, but it shouldn't be subordinated. Yes, he said, it's crazy how much risk there is in shorting. The max reward is 100%. I gotta think about that one. No, I don't think so I don't think so. I think momentum trades just tend to extinguish themselves out. And then, you know, you need to see financial improvements at companies. Like if D-Wave has a bad quarter next quarter, then, you know, the stock will drop because people will say, well, the CEO said quantum is now, well, where's the revenue? Psychology to me is something that's going to just be normally distributed. I don't believe I'm better at market timing than anybody else, even though I have 20 years of trading experience. You know, I think I am better at investing than most other people. But even then, I think I'm right 60% of the time, not 90% of the time. And this one I feel really confident, but, you know, not necessarily mean anything. But on the timing part of it, you know, we get trades that sometimes work like the day we do them. And then we get trades that like this that, you know, are thorny and difficult and painful. And like I said, I'd love to just escape with just a small loss. Thrilled. I have tons of friends where if you told them, you can go back in time and just say, I'm going to lose $1 million on this trade and you're never going to worry about the trade again. We would all do that right away, including me. You know, we're in this trade and we're going to work it out. And, you know, it's not going to be a positive experience no matter what. But let me tell you something about investing. There is no investor that only wins. Not Steve Cohen, not Jim Simons, not Warren Buffett. Simons was close to bankruptcy twice. Steve Cohen had to shut his firm down. Alejandro, we don't take you seriously, dude. we learned something a long time ago that I think a lot of people need to learn. This is really important. Process is more important or better than or greater than results. So if you don't give the underlying reasons for your thinking, this is what you get judged on. You don't get judged on your results because, think about it. If I had my cat poop on a litter box and I divided the litter box into 4 sections, here's the litter box. This is the NVIDIA corner. This is the Palantir corner. This is the Merck corner. This is the Oklo corner.
you know, if this poop was right 3 out of 4 times or 4 out of 4 times, you would think it was magic poop. It's a magic, you know, it's a magic litter box. But the reality is, you know, that's why we care about process. Why are you doing what you're doing? What got you in this trade? Some people even talk about pedigree. Who are you? Who taught you how to invest? Why should we believe you? This isn't an easy game. You gotta, I want to hear about you. That's why, you know, when you become a professional athlete, they want to know, where'd you go to high school? Who's your coach? What's your process? And your results matter too. At the end of the day, 1 and 2 mean nothing if you can't deliver 3. We start with 1 and 2. Don't really care about somebody who gets lucky. Why? We'll take a even bet. You have a 50-50 chance of being right and wrong. You can express this either as 0.5 or 1 over 0.5, which is 2. You know, what are the odds you get a bet right? Well, it's 50-50. What are the odds you get 2 bets right? Well, it's 0.25, which is 25%, or the reciprocal of 1 over 2 squared. Well, how about getting 10 bets right? What's 2 to the 10? Does anybody know? 2 to the 5th is 32. 2 to the 6th is 4. I think it's 124, right? 6? Yeah, it's 1,024. So to get 10 picks in a row, you have a 0.1% chance. But here's the crazy thing. There's 300 million people in this country. How many litter boxes is that? It's a lot of litter boxes that are really lucky. I mean, just on 1 million people, that's 1,000 people, right? Kind of remarkable. You got 1,000 Warren Buffetts. I mean, if you could do, think about options trade. If you can get a 50-50 options trade right 10 times in a row, basically even $500 becomes, you know, $1 million, right? So this is why we care about process, because you're going to run into people that are lucky. And you still have to decide, you know, was it luck or is there an idea behind it? And if they can't explain it, it's probably just a lucky litter box. If they can explain it, it's still probably a lucky litter box. And you got to think about, again, who is this person? Why are they good? What made them good? Natural talent? Is it somebody that they worked with and trained with for years? Did other people recognize their talent? Or nobody's recognized their talent yet, then do they have any? Maybe they don't have talent. Maybe it's a fraud. They could be a savant, but more likely than not, it's not true. Before you take a stock pick, think about it, because you might be just picking up a litter box instead of carefully thinking about, you know, is this something that is repeatable? Process is repeatable. Process you can improve over time. You might say, okay, well, I was a really emotional trader 10 years ago, but I'm a lot better now. 10 years ago, I didn't really know my industry like I don't know it now. Whatever it is. You know, 10 years ago, I didn't really understand value. Now I do. 10 years ago, I'd ignore momentum in markets. Now I pay a little attention to. Whatever it is, your process, you're going to make it better over time. If you can survive. But part of the process is surviving. Part of the problem is your results and surviving stuff like this. And not confusing results for process. Yeah, I mean, what doesn't work is also, you know, you have to be very careful about assigning the causality. You know, you could say, one of my favorite things is when people do biotech for the first time. I love this. This happens all the time with every binary event. It's about to happen again with INMB. So with cassava, you know, we explained the short really well. We're like, here's how it's going to work. Here's how this all happens. And then, you know, it happened. And people said, most of the people, like in the Joe Springer chat room and stuff like that, the cassava chat room, guess what most of the people said? They said, I'm not going to trade biotech again. And so they're trying to eliminate what doesn't work in their investing career. Their money's gone. Maybe, hopefully not all of it, maybe all of it for some. And some will say, I'm not going to invest. It's a rigged game. Only guys like Martin can make money in the market. Of course, I feel the same way now about quantum. But the point is that the people who lost their money in cassava refused to blame themselves. They refused to improve their process. Their process wasn't that they should never trade biotech. That was not what was wrong with their process. What was wrong with their process is that they didn't have one. And the process of saying, well, if I avoid biotech, this won't happen again. And they'll go rush and buy Oklo, or they'll go rush into some eVTOL company, or, you know, Joby, what's it called, Archer Aviation, whatever. And it's like they don't have a process for that either. They just heard the stock's hot. They're completely drawing the wrong inference of what they're learning from in terms of their mistakes. And you can't help those people. But if you could learn from your mistakes really intelligently, that's one thing. So for example, a lot of people say, Shkreli, you're not a tech investor, stay in your lane. you're better as a pharmaceutical investor. That's an interesting observation. Of course, the only person that I think knows those results over a really long time is me, and I don't think it's right at all. But you have to be really careful when you self-assess, because you may actually end up reinforcing a bad habit. If I watch you play League of Legends, I will literally can point out 200 different heuristics you've got embedded in your brain the wrong way. When you started playing League of Legends, you picked up around 200 bad habits. And each one has to be unwound very carefully, psychologically, innately, like you've addicted yourself to this bad behavior. Chess is the same way. You don't even know what your problems are. If you don't know what your problems are, then how do you fix it? And you just keep reinforcing these bad habits. So you kind of need a coach. And one of the best ways you can get a coach is by working somewhere. You work at a hedge fund, you work in a mutual fund, you work anywhere. Get a job anywhere at a fund-based company, even if you got to be an assistant. And then you can start learning. But until then, and sometimes you'll listen to your coach, but you won't change anything. I had one of the best chess players in the world coach me. I gained 100 rating points or something, but I didn't gain 880 rating points. I have tons of bad habits for investing. Some of you probably can see them. Some of you think you see them, but you don't. It doesn't matter. Investing is about you making decisions, not me. You have to make your own decisions. And you have to learn from your mistakes, if you can even identify them. It's hard to get better at things, especially things that are game-like, like investing or chess or poker or whatever. But I think it's healthy to pick up one of those hobbies and see how much better you can get at them.